platforms to access banking services. So digitization basically for me has come as an enhancement to banking processes rather than a disruption. Thank you very much for this privilege.
Thank you, Mr. Awer. Mr. Awer is in Nigeria. Let me hear from my other colleague before I get to Mr. David.
Hello, is that me?
We can hear you, sir.
Okay, so thank you so much for this session. Quite a lot has been discussed, but my takeaway is that, for example, we have, I would give you an example of Uganda, which has 20 million or so accounts on mobile money. But as an individual, I have 2 accounts. So we are counting pretty much, we should be talking about 12 to about 13 million. So why am I talking about this? Is that there is still a lot of people that do not have gadgets to access financial services digitally. So any innovations into that space, I've seen some companies like Keyphones, like Mkopa, that are giving loan products for gadgets for especially people up country or areas to access gadgets. There are quite a number of people in sub-Saharan Africa that cannot afford gadgets on the go. So that's quite still an area to expand digital finance. The other one is about the cost of connectivity. That's quite high. If you are to access a digital financial service, it's either through an application, which is through a smartphone, or through a USSD service. And the cost of providing those services to a customer is still quite high. Even I myself, who is supposed to be quite, I still feel it as a cost. So what is it that we are doing in this space as an industry in digital finance to make these services affordable to a person, to my mother or my grandmother in the village? So those are my issues. Those are still my issues. Even before we speak about the cost of the transactions, as has been discussed by David and the other team. So these are still issues that we need to speak about. In Uganda, there are pretty much about 2 million or about 2.5 to 3 million smartphones only in a population of about, adults of about 20, 25 million. So they're only, you can imagine. And then, so those are the issues. Those are still issues that we need to handle, to be able to bring more people into this space. Otherwise, we shall keep hovering over the same numbers. Thank you very much.
Thank you very much, my colleague from Uganda. Let's hear from Mr. David.
Okay, one of the questions that came up actually at the Uganda Microfinance Association's conference that I attended a couple of weeks ago in Uganda was this issue of access to technology, access to mobile phones. And one of the responses from people was, okay, why does the government remove VAT and taxes from these devices and encourage people to use the technology? And I basically said, don't take VAT off my devices, take VAT off low-cost devices, because these are the devices that many Ugandans would be using. So be more targeted at the way that we do things. And I noticed that Henry Kisembo is mentioning, that this is a journey. It's not just about digital finance. It's not just about mobile money. It's about how we use technology to drive our services. So from that broader perspective, I think one of the things that eventually we're going to need to be talking about is data and how we use data, how we harvest data, but more importantly, how we use data to manage our risks, how we use data to design our products and services. We're very bad typically at using data. So, that's one of my takeaways, is the transformation journey is much more than just DFS to sort of give Henry some mention here, because I think it's an important point. And key to that is how we use data in driving the future.
Thank you very much, Mr. David. I think I'll give my comments on this one. I appreciate the comments from everybody. But I must say, technology is changing all aspects of our process. And depending on where you are, you know how to apply it. I'll talk about the processes. From loan origination to loan collection, technology is changing everything. So most often than not, we focus so much on the origination part of it. Technology can help us. Please, there's also a huge issue at the end, how to do the collection part. If loan comes in, how do we get the people to pay? That is also another huge aspect. The issue of fraud is at the collections end, but it all begins from the origination, because some of us don't focus on how to prevent or control fraud when you are originating. I'll also talk about the product. Technology is also changing the way that our products are. Some people focus on just changing the traditional products you have and making it a digital product. It shouldn't also actually just end there. We should also think about how to add value, not just changes to be digital, but how do we add enough value to make it more attractive, better than how it was, but not just it being a digital product. Into the people, I'm thinking about the people who are working with us and the people on the customer side. We also make sure the people are well equipped to the right skill, with the right mindset, so that they can also be relevant in this area where everything is changing. I even still have a question on artificial intelligence and blockchain technology. It's something we should think about. If you look at some of the major players or major providers of funds in our space, most of the conferences, they mention where they want to put their money. And blockchain technology is becoming so big. So we should also be thinking about how we can also use blockchain. It might be too early, but it should be something that should be discussed. Then data is everything, just like David said, data. Every decision that is being taken should be backed by data. So how to collect the data should be important. How we protect the data should be important. The right people to analyze it and the tools to analyze and monitor the data should also be important, so that our decisions can be backed by data. We should always be aware fraud is always there. It can take away everything that we've had. So creating the awareness when they come to the people, so that the people that we are going to serve are actually aware of the products we are serving, and our customers and our staff are also aware that how they can help us prevent fraud. Then also on the technology part, cybersecurity is also done well. So these are some of the small comments I needed to add. But before we go, we'll give Gladys the chance to just have a final words and we end the session. Gladys, can you hear? Okay, Gladys is not here. I think this is where we draw the curtain for this session, so we can move on to other discussions. I appreciate all your time, and I'll leave it to my senior colleague to take it up from there.
Thank you so much for taking us through that journey. It looked a little bit slow, but I think we picked up the momentum at the last part, and it's like you people should stop it again. But thank you. I mean, we can't run away from technology issues. We have glitches every now and then, but thank you so much. It's a pleasure having you, Mr. Gabriel, Aaron, Mr. David. Thank you for coming forth for us too, Mr. Abraham Awe and Mr. Simon Gatika. Thank you everybody for your time, and look forward to more engagement as we progress on this conference for the year 2023. You all have a very beautiful time. It's nice. Thank
Thank
you.
you.
Thank you.
Thank you. Thank you so much.
Yes, ladies and gentlemen, we have come to the end of that session. Another session will be coming up in the next couple of minutes, and we'll try to bring each and every one of them back into the studio for those that will be in this session. I'm trying to get them into the studio right now. Sorry, we're getting ourselves ready for the session. Dr. Rabab is here. I think we have everybody for this session in. Zen is here. Dr. Henry Akanimo. Is there anyone we're waiting for? I think this is everybody. Yes.
We have one more person.
You have one more person? Who is to join us? I'm just trying to find out who is to join us.
I think Arinus.
Arinus is here. I'm just going to let him in.
Okay, that's with Dr. Clark.
Okay. Let me see if we still have someone to join us. I'm just going to take some people out of the back end so that we have enough room for everyone of us.
We're good now.
I think we're complete right now. Thank you very much. I think I'm going to go ahead and introduce this session. This session promises to be a very, very interesting one. And I'm pretty sure everybody on this panel is ready to do justice to the discussion of the day. I can tell you and I can attest to the fact that we have knowledgeable people on this session. And the topic of the session, what they're going to be talking about this time, is the future of digital microfinance. And this is actually very, very important for this conference because it's part of the foundation, the rock, the pillar that will take us further in digital microfinance. So without further ado, I'm going to introduce the moderator of this event. She's no other person than Akanimo Ojo. She has over 15 years of experience covering marketing, sales, product development, payment, customer value creation, and management. Within this time, she has developed flagship products and value-added services for financial institutions in Nigeria. She has targeted smart banking, capacity building, and business growth and access to finance. This has aided a contribution to international research and reports by organizations such as the IFC and SME Finance Forum, and furthermore, Akanimo has led and participated in numerous local and international forums, webinars, and roundtable discussions bordering on issues that affect micro, small, medium enterprises, women, and payments. She has had various positions in Tier 1 banks and managed a fintech that was focused cross-border payments. She's currently and presently the Premier, CEO, and Managing Director of Source Microfinance Bank, a new entrant into the new market with a vision of reinventing banking and using innovation and technology to provide a high-quality service, mostly to the underbanked and unbanked persons. She holds a Master in Business Administration from the University of South Wales and Miss Other Qualification. Miss Akanimo Ojo, you're welcome to take on this forum. Thank you.
Thank you very much, Olu, for that warm introduction. Thank you. And hello, everyone, joining from different parts of the world. I'm very, very privileged to be moderating today because we have quite an array of very experienced and very warm speakers. And I hope that at the end of this session, you'll be able to glean one or two wisdom, something you can use and for the digital microfinance. Now, as we have heard over and over again, even from the introduction, that microfinance actually is positioned to serve the underserved and underbanked individuals, communities, and small businesses, especially in developing countries where access to formal banking is limited or non-existent. It's been positioned as a very powerful tool for poverty alleviation, and some would say, even dare to say, poverty eradication. But however, with all of this and over the years, there's been challenges. Now, the advent of digital technology seems to unleash new opportunities to amplify the impact of microfinance, enabling greater access, efficiency, and innovation. Throughout our discussion today, we'll delve into the transformative potential of digital microfinance, analyzing key trends that are reshaping the industry. We'll explore topics that border on mobile banking, digital payments, blockchain technology, artificial intelligence, data analytics, amongst other things. Now, our esteemed panelists are comprising of industry experts, thought leaders, technology pioneers, which I will be introducing each and every one of them very, very soon. But what I'd really like you to do is come with us on this journey and uncover the transformative potential that the future of digital microfinance offers. So if you have any question during the discussion, I would say just pen it down and then we'll get to it. Again, I would like to say that this session would hold for a maximum of 1 hour. We'll spend 15 minutes of that discussing and leave about 10 minutes for questions from the audience. So let's delve into it, and I'd like to introduce our panelists. First up is Mr. Reynolds China. He is a seasoned banker with working experience both in microfinance and conventional banking, spanning over 25 years. He joined Microfinance Bank Limited in Kenya in 2015, September, an executive chief officer and executive director. Previously, he worked with Fallow Microfinance Bank as the head of operations between 2010 and September 2015. He's also worked with Standard Chartered Bank of Kenya Limited in various positions, including head of branch operations and service delivery, responsible for branch network as well as fixed enhancement management, product manager of East Africa. He's a board member of the Credit Information Sharing Association of Kenya, the former board member of the Association of Microfinance Institutions of Kenya. He's currently pursuing a doctorate in business management in Mobi University. He holds a master's degree in banking and finance, amongst other certificates. You're welcome to the panel. Okay, I think you want to unmute. Okay, great. Great. I'm sure that will do the work. Next is a very beautiful woman that we have in our midst, Dr. Rabab Yusuri. She comes with more than 20 years of experience in areas of development, microfinance, entrepreneurship, gender, and training. Dr. Yusuri currently holds the position of manager, microfinance sector of the Medium, Small, and Micro Enterprise Development Agency, a nationwide program founded by prominent, renowned international donors, with the Prime Minister heading in the board of trustees. The series expertise focuses on monitoring the performance of different microfinance institutions projects, primarily at the early stage, contracting up to repayment. She also ensures policies and procedures are fully implemented in all aspects of operations. She contributes to the negotiation with donors to extract funds for implementing projects. She's also in charge of studying digital payment companies' potential so that they can be to microfinance institution. She's a graduate of the Faculty of ASUN and holds an MBA in International Relationships from International Relations from Arab Academy for Science, Technology, and Maritime. You're welcome, Dr. Rabab.
Good evening. Thank you so much for the warm introduction and greeting. I'm really happy and proud to join you today.
Thank you. And I love your smile. Next, we move to Zain Ali. Zain Ali is a microfinance practitioner and banker with over a decade of experience in promoting financial inclusion and empowerment in Malawi. He has extensive experience in microfinance institutions, fintech institutions, as well as mainstream banking. He's currently serving as head of microfinance for Centurion Bank in Malawi. His current role entails the design and implementation of innovative financial products and services that cater to the needs of the underserved. His areas of expertise are in developing microfinance models that are both sustainable and scalable, leveraging technology and mobile platforms to reach underserved populations. He's conducted extensive research on the impact of microfinance on poverty reduction and is an advocate for policy and initiatives that support the growth for the sector. He's the head of microfinance at Centurion Bank Malawi and a board member for Malawi Microfinance Network. He continues to provide advice to the sector in the advancement of financial inclusion and policy reforms for the benefit of the sector. You're welcome, Mr. Zain Ali.
Thank you very much for that very warm welcome and your opening remarks. I'm humbled to be here and look forward to this session. Thank you very much.
Same here, the feeling is mutual. And finally, I will introduce Dr. Henry Clark Kisembo. He's a digital economy investment and business development systempreneur who engages enthusiasm and passion to make change happen and harness it to create rapid, impact-driven, sustainable development and social impact. He's bringing 20 years hands-on experience in the private sector, investment and transactional advisory, investment financing and investor relations, agri-finance, development finance, and a whole lot. He holds two doctorates, a doctorate in financial economics from the University of America, and a doctorate in development finance, master in public administration and management, bachelor's in social science. He is a certified business development professional, a certified project management professional, amongst others. He served on multiple national and regional and global boards. You're welcome, Dr. Clark.
Thank you so much, and thanks for the great intro. It's a pleasure to be here and share experiences and learning. Thank you so much.
Okay. So now that we've met, and even from hearing your profiles, you will know that we have the right people to hold this conversation. So now that we've met them, let's just delve right into the conversations. And I'd like to start with you, Mr. Zain Ali. So we've heard, especially when we had Mr. David open up this event for today, and he was talking about how digital is no longer going to be a competitive advantage, because I think now it's an expectation. But even given that, we know, especially if you are operating in developing countries, that as much as we want to say the world has gone digital, there's still a large population of underserved people. Now, how do you envision the future of digital microfinance, and what are the key trends that you believe would shape this industry in the future, considering the huge bucket of people that are yet to be financially included?
Thank you very much for that question. I think it's a good question to start the forum off with. If we look at, what the future, or how we envision the future of digital microfinance, looking not only at the Malawian context, but the developing countries, I think it'll be disruptive and transformative in nature. I think we'll see the entire microfinance value chain being disrupted and transformed. I mean, we'll look at areas like sourcing, client onboarding, risk assessment, loan processing, product management, loan management, making decisions, credit scoring, all of that being impacted by technology. And I think we'll also see quite a paradigm shift in the way that this is taken on by our clients. The customer in future will be more savvy to technology. They'll be more welcoming to the internet and smartphones and devices such as that. They'll want access to a one-stop shop for all products. They'll become more digitally educated to manage the whole self-onboarding process. We'll possibly even see groups operating digitally. From an operations point of, from an organization's point of view and their operations, we'll look at fully automating loan servicing modules in some cases, rule-based sanctioning, analytics, driven cross-selling initiatives, document management systems being put in place. And I think the key trends that will be prevalent in the future and going forward, I think, will center around the challenges that we have in underdeveloped or developing countries, rather, such as mobile penetration and connectivity, the use of data analytics and AI. How far can we employ these technologies, and how far can they be used within the context of the countries that we're talking about? I think collaboration and partnerships will be key. Collaboration partnerships with MNOs, with DFIs, with governments, and so on and so forth. We'll see a lot of evolving regulatory framework because of the nature of technology and its constant evolution. There'll be, I think, a lot of focus on alternate credit scoring and different models to derive a credit score for a customer, especially in a rural area. Financial inclusion partnerships will be key, but also ESG. I was listening to the previous panel discussion and their opening remarks, and they touched on ESG, environmental, social, and governance criteria. And I think that'll be key in being able to solicit funds for institutions to operate, this sort of green finance that we're stepping into now. So I think those are the key take homes, or where we envision to see the organizations and the customer, as well as the key trends going forward.
Okay, that was quite a handful, but thank you so much. And what I really take from that is, within everything, you are riding on the back of the advancement of mostly mobile to these communities, because everything you have talked about tied around that. And I also can pick from what you have just discussed, a change in mindset of how we look at the customers, how we look at the institutions themselves, and the kind of policies that we put in place, and the way we manage the data of a sort. Thank you so much. I think that was a great opening. I'd move to you, Arenas, now. So we've heard a lot of people, you hardly go on the internet these days, or you go to any conference. At first it was blockchain, and now it is AI, a lot of machine learning and a lot of buzzwords being thrown about. But let's come practically, and also because I did open with the people that microfinance are supposed to serve. Now, in reality, when you look at that community, how do you see these emerging technologies actually helping to help microfinance offer services and improve customer experience, given the personas of the people that microfinance is supposed to serve? Sorry, you have to unmute. You have to unmute your mic.
Sorry about that. Yeah, the previous speakers, you can hear me?
Yes, please.
Great. The previous speakers have alluded to advancement of technology as a way of the future, and I think the immediate previous speakers just spoken about what we are about to see in the coming years, and that is true. Obviously, AI, machine learning, data analytics, are going to become very, very key concepts as we move forward. Now, for microfinance institutions, obviously these tools of data science are critical for data analysis or analytics. So we are seeing the microfinance of the future having the ability to examine, large volumes of data and making more precise forecasts or predictions about the behaviors of their consumers. The microfinance should be able to analyze the market trends. This all is happening because of the capabilities provided by AI and machine learning. The second aspect that we see is microfinance banks leveraging on the use of real-time data. We are in an era where we are having real-time payments. You're doing an RTGS real-time, or mobile transactions are happening every 2 minutes. So as a result of that, the microfinance institutions then can tap into that capability to have access to a wealth of data that is available on real-time basis. And this can enable them to make faster and more informed decisions. And by extension, that will enable them to respond to customer needs a little bit faster. And the third element I can talk to is where microfinance institutions, by analyzing customer data, can gain insights into the customer preferences and behaviors. And therefore, because of that enablement, they are able to offer personalized and targeted products and services. That means we will have a good customer experience. So in terms of other benefits that we see from AI and machine learning and big data, automated personalized messaging is enabled. Chatbots. You can be able to chatbot the customer. Credit appraisal, I think one of the speakers has alluded to credit scoring being done using algorithms and alternative data. Customer grievances can be logged on using, chatbots, for instance. For instance, in the land system here in Kenya, although it's not microfinance, but we have cases where chatbots can be used to, you can use chatbots for dealing with the customer complaints.
Okay.
Then financial literacy of clients also can be done using AI and such tools. So,
okay.
Yeah.
Thank you so much. Thank you. So gaining from that, and I'm seeing the benefits that are enormous, and then we could go on and on if we're going to talk about the benefits and how it's just going to change the landscape. But Dr. Rabab, just allow me to take you back to connecting these solutions with the people that need them. Because again, if we listen to David, one of the struggles is that there's this wonderful thing happening in the world of digital microfinance, and then again, the space has become competitive in that you now also have digital lenders that are not basically microfinance. But there's still this huge population. So I'll take my country, for example. Over 46% of adults are excluded, financially excluded, and mostly underserved. Okay. How do we draw this? So how do we connect the solution to the people that actually need it? So my question to you would be, how do we bridge that gap between the consumers and then the digital microfinance itself?
Okay. Thank you for the question. For sure, digitalization has had lots of successful initiatives that lead to financial inclusion. However, we put into our consideration that if we have not taken cautious steps and put the needs of clients and MFIs or microfinance institutions into our consideration, this might lead to a further financial exclusion, because they need to learn, they need to accept that change, and this might take some time. And people have different needs and preferences, and this should be studied. So as a start, digital finance education should be offered to both of the loan officers in microfinance institutions and the microfinance borrowers as well. And the need as well to learn or to be educated how to accept that change, because changing the traditional system finance of microfinance into a digital system is a huge change that people need to accept, and we need to address this, and we need to know how to address the mentalities in order to accept the change. Because as we know that one of the main characteristics of microfinance is having this personal relationship between the loan officer and the microfinance borrower. This is changing somehow. I mean, in some countries and in some areas, it has been acceptable to apply digitalization fully, and in some areas they're still learning, and they are still sometimes they are succeeding, and sometimes they need more training and more innovative ways of application. So what I think is that digital learning is one of the keys. We need as well to focus on the women needs, because they are one of the categories that could suffer from discrimination. We can confirm, or we all agree with the idea that they are more vulnerable for financial exclusion, either because of the lack of awareness or lack of the society or the society norms. And sometimes they do not even have any forms of technological devices. And this is very essential to accept or to apply digitalization. So one of the things that we need to know whenever we are applying digitalization or offering digital financial education is to design a gender intelligent products that are specifically addressed for women. Because most of the products in the market, they are what we call gender neutral. But we must address the needs and the preferences of women, and they accept it greatly, because lots of women stop or they cannot start their business because one of the obstacles is that the many trips they have to make to the governmental offices and the issuing of papers. But digitalization would make it so easy for them and would give them a better environment. But they only had to be easy and to be informed, and we need to raise the awareness regarding this issue.
Thank you so very much. I found it very informative, actually. And then you did touch on two things that I'd really like to quickly just point out, because it would lead me to my next question, which is product design. Whether it is for the gender, whether it is for the persona, whether it is for the people, but the products must be designed to suit into the life. So the product is for the people and not for itself. So we have a lot of people churning out digital products for the sake of churning out digital products, because a product can do this, is fantastic. Oh my God. But then, does it fit into the community? Does it address the case of marginalization? Does it address the case of gender discrimination? So that was very strong. And then the case of capacity building, which I will now delve to Dr. Clark, because I see him nodding and smiling, kind of identifying with that. It looks like you have a little to offer to this, but before then, I'd just like to throw this question to you, because in the area of capacity building, I don't think one organization does it all. So when we look at collaboration and partnerships, which again have been proven to be powerful drivers of innovation in the tech and digital space, how can microfinance institutions collaborate with others, whether it's fintech startup, whether it's technology providers, just stakeholders, to co-create situations that will address the unique needs of their clients? Over to you, Dr. Clark.
Thank you so much, AK. And when you saw me smiling, my memory ran back in the days when I first encountered microfinancing. I think I was 7 years old, because my mother was the pioneer of the first group in Africa set up for Finca that went into this whole.
Good morning, everybody. It's nice to see you again. You're welcome back to Africa Financial Inclusion Conference Year 2023. My name is Ajitumobi Olumayewa. I'm the conference director. It's a pleasure to have you once again here. I'm going to bring in the keynote speaker for this morning into the studio. Um, the keynote speaker today is no other person than Dr. Clark Kisembo. You probably must have heard him yesterday because he was part of our panel yesterday, and he did a very good um, work on the discussions that we all had yesterday. I'll just give you a brief background about Dr. Clark Kisembo. Dr. Henry Clark Kisembo is a digital economy, investment, and business development systempreneur who engages with enthusiasm and passion to make change happen and harness it to create rapid impact driven suitable development and social impact. I'm pretty sure that by the end of this presentation, you'll get to know more about Dr. Clark Kisembo. I'm just going to stop here. He's going to talk more about himself and introduce himself better. I just want to do it that way. Thank you, everybody. You're welcome again. Dr. Clark Kisembo, the floor is over to you. Thank you.
Thank you so much, Dr. Olu, and a very good morning.
Dr. Clark, we can't hear you.
Do you hear me now?
Hello, Dr. Clark.
Yes. Do you hear me now? Hello, do you hear me? Do you hear me now?
Have you. We can hear you. We can hear you. We can hear you.
Great. Great. Thank you. Thank you for the introduction. And once again, a very good morning to you all who are tuned in. I'm Dr. Henry Clark Kisembo, and a practitioner in development. So I'm going to focus much on the advent and the current situation of microfinance. However, just to call on all those who are tuned in, please utilize the chat boxes or the chat rooms to send in any questions, supplement, or any contributions, such that I'll leave quite sufficient time for us to have a conversation. I love to have conversations than more of seeming to lecture. And I'm going to do more of a freestyling. So I am a financial economist and investment professional with a PhD in that from California, and I also have a PhD in development finance and technology from Florida. My master's is in public administration, but I've done professional courses in business and digital technologies. I've been in the field about 22 years, of which much of that, almost all my life, has had a link with the microfinancing and banking financial services, but also bringing in technology. I do work for Development Associates Link International, which is a private entity, a regenerative and transformative growth and development consulting, project management, and investment facilitation firm, with the objective of transforming families, societies, nations, and also countries. So presently we are in 101 countries, of which about 49 countries on the African continent, but the others on all the other continents, Latin America, Caribbean, Pacific, Asia, North America, Eastern Europe. So we have quite a huge team working in all these areas, delivering financial inclusion and business development with the social and humanitarian aspect towards business. With that brief, I would say that let me start by saying that microfinance started way back over a century ago. And over a century ago, remember that what was used as for trade was barter trade. Now, this barter trade is where if I have beans, I can, that is value to get cassava. But if I have potatoes, sweet potatoes, I can get fufu or yam for that. But then to be able to feed my family and also have what to contribute to the society or groups, which was mainly driven by opinion leaders and community leaders, you had to have a barn. So barns these days are called storage facilities or silos, and but they used to be barns. So you keep some in the barn, and then you have what you're taking to the group, and then when you sit in a group, because that is the only way in which social capital was built, in which you had to know people around your community or your society. So basically, I didn't want us to forget that microfinancing has a history stretching right back. Only that the medium of transaction is the one that has evolved over the times. Fast forward, we come to the 80s. In the 80s, the computer was available, and that is the first time that microfinancing was encountering a transition from manual books into technology. But also remember that the centuries back, it was either writing or it was specifically trust-based, because you had to be a person of stature to be respected in community and society. You had to be trustful or trustworthy within the community. So come the 80s, 1980s, there was a transition from the man of books. And I remember personally the time I encountered groups in the new age. In the new age was when the first group that Finca had sitting in Uganda, Kampala. I think I was about 7 years, but my mother was so involved in mobilizing women to come and join this new financing engagement. And I kept attending some of those meetings and got to understand what exactly they did. Like they collected money, savings, and then they lent each other, but under the guidance of a loans officer. Now, with that background, I found myself also into the same field. One is being a businessman, because I run businesses, quite a number of them in different sectors, and they are all subsidiaries of Delhi, because Delhi is a group. So it's a group on many companies, technology companies, companies in financial services, companies across 16 sectors. And so my passion has always been inclined towards inclusive finance, ensuring that society and communities can engage in economic activities that can generate for them finances to be able to access the basic needs to life, but also to start growing and get to another status. So that brings the whole purpose and essence of microfinancing, that traditional banks, what we'd call the brick and mortar, did exist, but a lot of people were left out. One, because of it was intimidating. A person just can't come out of a garden and enter a very nice, clean, tended building, but also they were quite very far from communities. So the microfinance institutions brought in a lot towards getting closer to the communities and people. And these communities are not only rural-based, but also, as I intimated yesterday, that also in cities, because in cities, remember there was a time when there was rural-urban migration, population explosions in cities, which created slums. But these slums, for example, in Kenya, Kibera is one of the largest in the world. Perhaps not now because my company has been so involved in turning around the slums across Africa into affordable housing and more decent and dignified housing projects. And this is also a microfinance model because they don't pay at a go, but they collect money, and then this money they make a pool, which pool then they can save or use to be able to own a home. They pay for a home over time, maybe 5 to 10 years, depending on their revenues. But when they have a dignified living, so a lot of these slums, Kibera in Kenya, Katanga, Wandegea in Uganda, a number of them in Ghana, in Accra, have changed. But we saw few microfinance institutions in the 80s, 90s, and come towards the end of the 90s, they were becoming quite a handful because I remember in 2000 when I was joining post bachelor's, when I was joining a telecom group, I brought up a model called the Rural Markets Initiatives. And my focus and heart was at how do we use communication to enhance growth within sectors which are underserved by typical traditional banks. And the project was approved, and I had to roll it out initially in Uganda, across the whole country, installing masts, I did a number of things, but bottom line was that people got information about pricing in the cities, and then they brought this information back to their groups where they were collecting money and saving. But also when this money was enough, they could go to the nearest, what they call a microbank, which is of course a microfinance institution, and they would say, we have this amount of money. Can you top up for us? We start a project, maybe a chicken project, a carpentry project. So the purpose was to transform livelihoods of those who are underserved, yet they are one, economically active, but don't have markets open for them because of lack of information. But also they needed some organization to be organized and recognized, which today we call credit history, because what was in their books, if it rained and the ink is gone, then you may lose out to the history. But they had their cards, what they call passbooks. So what are the learnings over the years? Because I've worked in over 29 countries on such missions to ensure that inclusive finance for all is there, and women, including women, the youth, including people with disabilities, including people at risk, for example, the seafarers, or what I would call fishermen or fisherwomen who are living on water. They are very far. You have to go on canoes to get to them. How do they get served? And that's where technology, fast forward, came in. So, but key is to understand, before we talk about technology, that microfinancing is driven by some key factors. And these factors, once you remove them, that means that the whole essence of microfinancing or microbanking is gone. The first factor is social capital, that persons depend on social capital, that it is people know people, and it's one of the drivers of microfinancing, because they know it's a time when they can meet, talk about what's happening in their communities, but also they can guarantee each other without specifically having a collateral in terms of assets, let's say land, or maybe a television or a radio, all that kind of stuff called collateral. But even the group guarantees, what we call group guarantees, for those who took the model of group guarantees, but also the cluster guarantee, that if I know somebody, I know their personality, their character, then I can sign up for them as a guarantor. There is the issue of trust. Microfinancing has been so much an issue based on trust. Once that trust is gone, then you don't have, you lose the foundation, because remember that we are in a technology evolving period, but this technology is evolving very rapidly. However, we can't forget the fact that trust is very key, and the trust is one of the reasons that even those whom I have visited in Uganda alone, I think I've worked with over 500 institutions across the world. There are multitudes that I've worked with, and trust is very key in also managing the aspect of risk and default. And coming in the issue of when you're talking about microfinance or microbanking, you don't sit in your office and then come up with the products and then go to the people and say, these are the products we have. Experience has taught me that you go and co-create, ask the people, what are your needs? What are your pain points? Then come and then design products which exactly suit the segment, particular segment, the particular people, even the particular community that you're dealing with. And when dealing with this community, you must be able to understand that people don't sleep, wake up, eat, and then sleep and go to the gardens and come and boom, they have money. No, there must be some economic activity which is happening. And this economic activity, they could have initiated it through selling their products, agri products, or any products that they have come up with, and they get some money. So economic activity has to be enhanced, but also key to this is personal finance management, which we could put under financial literacy, and later on also digital literacy. Another important issue is that as microfinancing and people are related, in order to generate growth and development, because it's useless to even have microfinance or even talk about it if there is no growth and development, or what we'll call sustainability and impact. Daily prefer to call it regenerative and transformative growth, because for us, it's not one project and then you're gone. It is continuous. Even me, when I'm passed on, generations to come will find Dali and they'll continue with that. So it has to be regenerative and transformative, which means that it should be sustained beyond whether it's donor funding or the immediate financing available, but also it should continue. There should be money in these institutions to keep economic activity running, but also transformative. One who was living in a rugged shelter house should now own a home, a dignified life, and that is the whole essence. Coming to technology, technology has really evolved and advanced very fast. Many of the companies that I know currently are into digital finance, that was never their intended business. For example, some were bulk SMS entities that found themselves jumping onto digital finance, which is very good because there is always transitioning, there is always pivoting. Daily, over the last 19 years, this October will be 19 years, has also transitioned quite a lot because it has to go with the times. People believe a lot in Dali worldwide, and has a lot of influence on the financial and global markets with a focus on the underserved communities. So when these companies had to jump on digital finance and deliver, a bulk SMS company has to rethink, their business model. But their business model is not all about having software developers and then they sit and see how money moves. Because remember that the time M-Pesa came to light, I was in Kenya. I was one of the technical advisors to Safaricom. And I saw all that come, even through the venture with the Faulu. Personally, I designed a model of agency banking for a number of countries, including Uganda, and worked with technology companies to have this realized and did a lot of trainings. So, but the gap I realized and I saw, which I had to firefight, which has kept me a lot in the field, because 65% of my time is in the field, is that the fintechs, the fintechs of back years, let's say 3 years pre-COVID, were picking products, as some assuming and taking to the communities because it's all microfinancing. When you talk about microfinancing, it's not only the microfinance institutions, but talk about any institution that is targeting the micro level. So the technology comes in, and technology is an enabler which is supporting the microfinance institutions to be able to reach out to people in real time and promising safety, and also to enhance the core banking systems of the microfinance institutions. I remember in the year 2000, the first technology I was introduced to was a loan performer, and of course, we had a lot of versions, improving the versions. But come now, the number of technologies, the issue is that they have to be aligned with the purpose and the model of microfinancing. Because if I go to an institution and it is showing me, for example, a repayment rate of 98%, and a report generated on default rate is about 68%. There's something terribly wrong with the technology they're using. And so I've been involved so much into technology audits, but also writing the RFPs for these institutions to be specific on what we need or they need, and this is integrated. Open APIs have been at the forefront of advocating for open APIs with telecoms, with financial institutions, microfinance institutions, and this has also enabled now interlinking of institutions, but also the microfinance institutions having different branches which are linked and can have transactions real time. The challenge here also, of course, I've spoken about the technology development. The development has to be aligned, whereby a software developer sits with a microfinance accountant or finance specialist who understands what they need and then will inform what the software developer does. But also not underscoring the fact that connectivity, we've seen challenges along the years of connectivity. When I was rolling out rural market initiatives so many years ago, what we call the masts or the towers, we used to call them base stations. And I came up with research, and this research is what led to what we call the village funds for rural markets initiatives, whereby I knew there were antennas which could pull which could pull connection or connectivity 60 kilometers. So if I join two, I would be targeting 120 kilometers. No matter where the base station is, I could connect them until there is connectivity. But till today, there are a number of them struggling with connectivity, to the fact that they have to reconcile at 9 p.m. in the night. If I am fraudulent, I can go and withdraw money like 5 times if I understand that this institution is not real time. So connectivity is one of those issues that I've realized has to be enhanced, and assurance given to customers. The loans officer themselves, they need to be, because when you're talking about a digital transformation journey in microfinancing, that means the internal in the institution and the external, the customers of the institution and also the staff of the institution. If a staff goes out and has not understood the product, they are the face of the institution, then that institution is going down. But also if they fear that it risks bringing down their jobs or risking their jobs, then they'll go and decampaign the technology product. But the good thing is that with much internal awareness and education, because a lot of this digital finance, for example, has been considered that that is Kisembo's product. You go to a financial institution in some community and ask them, tell me about the technology you're using. And they say, no. Kisembo will come tomorrow. So you need to wait. I told them, no, it doesn't work that way. Right from the board, management, and the management all have to be involved. I will finally say that in the current, we need to think of how do we drive economic activity. That is through a value chain approach, building ecosystems, and then have business driven and focus, but also security on the technology, a multi-level authentication, which is simple to understand, but also institutions should have what we call firewalls. If you have below 4 firewalls or levels of approvals, please, you need to increase that. Big data, blockchain, artificial intelligence, all these are good, and they can increase the uptake and adoption of technology within microfinancing for the welfare of the targeted underserved communities, and also for institutions to make money, because they are not charities. They are there to make money. There is profitability, there should be scalability, there should be viability, and there should be sustainable to continue and grow. Thank you so much, ladies and gentlemen. And I'll ask the moderator to open up for any questions or supplements or contributions. Thank you so much for giving me this opportunity, and looking forward to engaging more with anyone who wants to know the depth of microfinancing and technology. Thank you so much.
Thank you so much, Dr. Clark Kisembo. You have actually broadened and enlightened the space for this discussion and for the conference and for the entire day. And I'm pretty sure that people have heard what you have said. Thank you for what you guys are doing at DALI. I guess one of these days we need to bring you on board, and you need to share more about DALI with us so that people can actually see the impact that you are creating, not just in eastern part of Africa, but all across Africa, Western Africa, and the Northern Africa countries. It's nice having you once again. Thank you for always being there for Financial Inclusion Africa, and thank you for what you're doing in financial inclusion across the continent of Africa. You're a worthy son of Africa.
Thank you. Thank you.
Thank you. You have a very beautiful day.
Thank you, sir. Thank you. And bye-bye. Okay.
Bye-bye. Yeah, that was the first keynote address today, and that was Dr. Clark Kisembo. The next session is coming up right now, and I'll be bringing the participants into the studio. Thank you. Hello, Ms. Chinaza Collins, are you there? You're live now. Can you hear me? Hello? Hello? You're live. Can you hear me? Hello, Flavia?
Hi, Olu. Can you hear me?
Okay. I can hear you loud and clear. Thank you. Flavia, you're welcome.
Thank you so Fantastic.
Who are we waiting on? William.
William and Odion, I believe.
And who is that? Who are those joining your panel session, ma'am? Okay.
So are we set, or we are waiting for other people to join?
We are set. We're just waiting for one or two other people to join, so that because we're already live.
Cool.
Okay. Okay, I think I'm gonna bring Dr. Clark back up, and I think I'll sit as part of this panel.
Okay, so are we ready to start? Should we start with introductions and then dive in straight?
Can you all hear me now?
Yes, you're loud and clear.
Okay. I'll just we're just gonna start. We're gonna have Dr. Clark joining us, and I'll just stand by in case they're coming into the backstage. We'll bring them back in because we don't want to waste too much time today. Okay. Good morning, everybody, once again. This is another panel session, and the topic of the session is actually the impact of digital microfinance on financial inclusion. And I think this is a very relevant topic for us to discuss outside the fact that we're digitalizing microfinance, but what is the impact on the whole financial inclusion industry? And I'm pretty sure the panel members will do their best to tackle the topic today. Sorry about that. And I'm pretty sure that we're good for this to go. The moderator for this program is not another person than Mrs. Collins, Chinaza Collins Ogbo. Pardon me for that. Chinaza Collins Ogbo. It's nice having you today, Chinaza. Over to you. I can't hear you. We can't hear you.
You're muted. Chinaza, you're muted.
We can't hear you.
Please unmute yourself. Chinaza, please unmute yourself. Oh, she has dropped off. Sorry about that. Doctor, how do we proceed? Should I start? Okay, welcome.
Yeah, sure. I think in the interest of time, please, and also our audience, connectivity is one of that we are going to talk about. So please, let's kick off, and other members will join us.
Thank you. Welcome everyone once again. Chinaza, you're back on. Are you able to hear us? Please proceed.
Yes, I'm back on. Can you hear me now?
You're loud and clear.
Fantastic. So it was the laptop. Awesome. Okay, as I was introducing, my name is Chinasa Collins Ogu, and I'm the moderator of the session on the impact of digital microfinance on financial inclusion. It's been an exciting conference so far, and I have a lineup of very interesting panelists that would share their views, their thoughts, their insights, their experiences on this topic. But just to give a bit of context to this conversation, we all know that financial inclusion, which is the goal of ensuring that all individuals have access to affordable and appropriate financial services, is very crucial to promoting economic growth and reducing poverty. However, the traditional banking systems often fail to reach the most vulnerable populations that we care about, particularly those in hard-to-reach communities with very limited resources. And this is where digital microfinance services step in, leveraging the power of technology to bridge the gap and extend financial services to the underserved communities. Digital microfinance services encompasses a wide range of technologies, including mobile banking, digital wallets, and online lending platforms. These innovations would typically enable individuals to open bank accounts, save money, transact, and a host of other banking transactions. By eliminating the need for physical infrastructure and reducing transaction costs, digital microfinance services will bring financial services closer to those who need it the most. In this panel discussion, my esteemed panelists, who are experts in their various fields, will delve into the impact of digital microfinance on financial inclusion, where we'll be examining the benefits, the challenges, the opportunities that they present. We'll also explore real-life case studies and share insights in a thought-provoking exchange of ideas to better understand the potential and limitations of these transformative technology. I encourage you all, our audience, to actively participate in the discussion, post questions, and contribute to this collective understanding of this very important topic. And on that note, I will allow my guests, my panelists, introduce themselves. So I will start with you, Dr. Clark. I believe that you're a very well-known personality on this conference, so maybe no introductions needed, but please give us a quick brief of who you are. And yes, thank you.
Yeah, I'm glad to be on your panel. Thank you, Dr. Henrik Kisembo, financial economist and technology expert in development finance, 22 years in the financial inclusive finance space, microfinancing space, and also social and humanitarian growth and development across multiple countries in Africa, Asia, Latin America, and Caribbean Pacific. Thank you so much.
Fantastic. Thank you very much. Flavia, over to you.
Thank you, Chinaza. Welcome, everyone. My name is Flavia Nakamate. I'm a specialist. I have experience working with populations of women, youth, adolescent girls, refugees, and people with disabilities. I have worked with these communities in both for-profit and non-profit environments, in consultancy firms, and I'm an associate with DALI as well, but currently working with Save the Children Uganda. So I have experience in both for-profit and non-profit environments, but targeting microfinance and access, basically financial inclusion and financial literacy for marginalized communities. Over, thank you.
Awesome. And it's wonderful to have you both on this panel. And, thank you for the great work that you continue to do in the region, across the continent, taking time out and being passionate about the people that are likely to be left behind. So on that note, I think I'd be a bit partial. I will start with the lady on the panel. Dr. Clark, apologies. It's women supporting women. And Flavia, the question that I want to start with, given the nature of your work experience, is how would you say that digital microfinance services contribute to poverty alleviation and the reduction of income inequality?
I think I would say to currently to a small extent. Why my experience working with those marginalized communities in both for-profit and non-profit environments, in financial institution setting, and then also in the non-profit environment with NGOs. It's to a small extent. Why would I say this? That if you look at the different collaborations mainly, most of these targeted efforts are usually through collaborations, which are mainly driven by donor funds, from my experience. So usually there's a bit of sustainability comes in as a challenge. Let me use this example. When I was still with a bank, I used to work with Finance Trust Bank in Uganda. So we used to have targeted efforts for microfinance targeting women, because Finance Trust puts women first. However, the challenge was throughout the product development systems, we used to work a lot with Microsave, DALI. You develop a very good product, but that issue of moving it forward beyond the project period became a challenge. And usually that how this came in is that if you look at the communities that we target, there is a lot that needs to be put in place for you to continue with this target group. So I feel to a small extent, but it goes back to the people who are supposed to drive this. Let me look at the financial institutions, because if it's microfinance, we are looking at now the financial institutions. Are they owning it up? Or they are looking at the cream, their cream, where they are able to get, the income, the profit, and then these ones come as low-end clients, and they are not their core market segment. Yet when you look at microfinance, the main objective is to that financial inclusion, to bring on these people who are financially excluded. The other example I would give, why I'm saying to a small extent, is that in the non-profit environment, my experience has been that most of these innovations we've had, they are mainly donor-driven. Let me use the example of refugees. We are currently working with refugees, and we have a project for ICT for development, where it was mainly looking out for refugees and then targeting them with digital microfinance. But I think, like the previous panelists have already mentioned, digital microfinance can only be driven if you have digital literacy. So it becomes hard to deal with communities who are not digitally literate. But when you talk of digital literacy, also you need the gadgets. I think Aiden mentioned something to do with mobile phones and access to mobile phones. So that two work hand in hand. And then you must have financial literacy in place. And in this case, it should be digital literacy because, like we've mentioned, these are people who are in hard to reach areas. Some of these people are in rural communities. If you know settings in the refugee settlements, it's not easy to reach out to these people. So basically, that would be my submission on that question. A lot needs to be done. Some work has been done, but the issue has been around sustainability. We've seen so many good interventions come into play, but once the donor pulls out, there is no ownership, and that is how it all dies. So yeah, that's it on that question. Over. Thank you.
Thank you very much, Flavia. Very rich answer, and I do agree with you. Sustainability is a very critical part that I think needs to be addressed. It's one thing to start an initiative, but how do you see it so that it actually has the real impacts that we seek to achieve? And so, Dr. Clark, I'd just like you to comment on Flavia's response. Just again, thinking about the incentivization to target this audience or this segment of the market. So she has spoken about how the for-profit sector are not necessarily keen because, again, it doesn't make business sense, but then they probably have the money to target these populations. And then we find ourselves depending on external parties, donor funding, to try to achieve these objectives. What are your views on that? And how can we achieve sustainability?
Flavia is really spot on, and like I already shared during my keynote address, was that Delhi, the company I work for, it has embedded sustainability and impact inside the regenerative and transformative growth and development. Reason, because there's supposed to be continuity. In our experience, we have worked with refugees, we have worked with women, we have worked with youth, underserved communities, basically, both in the urban and the rural areas and the peri-urban areas. But you realize that one is you must have a proof of concept in order to convince investors or financiers to believe in what you're talking about. So what happens is that the development partners or donors come in to initiate that. So when they finance, say, some innovations, they're periodical because it's a project. A project could be 2 years, it could be 3 years, it could be 5 years. I have worked on a number of projects with a number of development partners, and you realize that as they start to exit, there is anxiety of what next. So that anxiety of what next affects one, the community, the staff that are in there, and of course also the institutions. So she's really spot on, but I would really advise that the game has to highly change. We need to focus on how do we capitalize these micro banks or financial institutions to be continuous, apart from shareholder capital, which at times is very, very small. And that's where institutions like DALI come in, because you heard me say that we are also an investment facilitation firm by mandate. So we finance these entities at really affordable and patient capital to be able to have continuity instead of just pulling out after a project and everything is gone. Because there have been tendencies I have witnessed over 20 years. When a project ends, people slip back into poverty. So you have to set the cycle again. Thank you.
Awesome. Thank you so much, Dr. Clark, and amazing answer. And there's a lot to unpack in there as well. I'll come back to you. I see that there's a gentleman in the room. Can I have you introduce yourself, please, as one of our panelists? I can hear you, sir. Please unmute your mic.
Are you able to hear me now?
Fantastic. Yes, sir.
Yes.
Please introduce yourself to the audience.
Thank you so much for having me. My name is Chilesho William. I'm from Zambia.
Welcome.
Yeah, I'm CEO and founder of Country Yard Credit and Collections Limited, focused mainly on digital inclusion, financial inclusion, and servicing the underprivileged communities. I have a master's in financial services management focused on financial inclusion. I previously managed the Express Credit, which is one of the leading financial institutions in Zambia, as CEO. So I'm glad to be here and contribute my skills and understanding of the financial inclusion to the conference. Thank you.
Thank you, William. It's a pleasure to have you here with a very strong profile and a very deep experience of financial inclusion. Given that you even have a qualification in it, it's great to have you on the panel. And I think that without necessarily putting you on the spot, I will go straight to asking you your first question, which is based on your experience and your expertise. In what ways can digital microfinance address the challenges of informal economies, and how can we improve the formalization of financial transactions?
Thank you so much for that.
We can't hear you. I don't know if it's just me.
Okay, are you able to hear me now?
Fantastic. Yes.
Yes. So under informal economies, we basically looking at economic activities that happen outside the formal activities where regulation exists. In this, we are looking at basically people dealing with money and transactions that are not formalized. They are not regulated, and in most cases, there is no documentation involved. These areas are prone to fraud, and in most cases, the manipulations exist in these areas. So with the oncoming of digital microfinancial services, we can have all these informal economies that do now exist. In most cases, especially in developing economies like ours, you have these existing due to high level of unemployment. And even if there are a means to existence and to livelihood, they still pose a challenge to most of these underprivileged economies. So with the coming in of digital microfinance services, we can have all these informal economies included on digital platforms that would ensure that they are properly regulated. There's some sort of existing database to which people can be serviced regularly, because as it is, and in the environment that these exist, it's difficult for them to actually access these facilities like the credit, the savings, the insurance facilities, and also being able to just have a proper reference to which credit facility could be advanced to them. So having the digital platforms would actually help to incorporate most of those informal economies into formal, and they should be able to contribute fully to the formal economy activities that happens in each community, and contribute fully to the communities they exist in. I submit.
Fantastic. Thank you so much for that, William. And so, I'm in Nigeria, and we have a huge informal economy that actually thrives. I often like to segment that informal sector into the groups that we care about, who are the marginalized communities, who are poor, and then there are the groups who aren't necessarily poor, but are just more amenable to the informal ways, and just because it benefits them. And I think the bigger question then is digital microfinance or even digitizing transactions a silver bullet to transiting from informality to formality, just given that there would obviously be some level of resistance, especially to those groups that benefit from being informal. And I'd like to pose this question to Dr. Clark.
Thank you so much. So, with the advent of digital microfinancing, the issue here is that it depends on how they are approached. I have been to a number of states in Nigeria, Abuja, Kano. I've been to a number of them, and I've seen exactly what you're talking about. And this is cuts across Africa and a number of other south to south communities. There are those who we call early adopters. They are going to jump on it and they'll say, let me jump on it. Whatever happens ahead there, we shall see when we get there. There are those who are skeptical about what is this whole technology about. And incidentally, these days I don't get a question, but it still comes. But 3 years ago, a question could come to me that, so here is my money. How do I put it into the phone? Where do I insert it? The money notes are so huge to go into a phone. And I'm like, there is need for literacy here, and also utilization of the gadgets, whether they are post machines, whether they are phones, or whatever format it is. But to answer your question directly, is that digital microfinancing is an enabler, and if it is done right from the start, prototyped, because there is ideation, prototyping, piloting, implementation. You have to think of refining, revisiting, and then get back. If it's done right through the digital transformation journey, then it is an enabler, because you reach out to a wider population on lesser operational costs, but you help out a lot of people who would join. But don't be discouraged, because there are going to be early adopters who are very few, very small percentage, and the others will come on. But yeah, I think it is an enabler to increasing uptake of microfinance products.
I couldn't agree with you more, Dr. Clark. It definitely is an enabler, definitely enabling in the right direction. And it is a slow pace. It will take time, but I guess that as long as we're traveling in the right direction and making those small improvements over time, then at least we're doing something right. Right. So absolutely agree. Thank you. I will now come to you, Flavia. And just on the back of the conversation so far and just understanding the nuances of the informal economies or the sectors or these underprivileged, underserved communities, how do you think that digital microfinance services can specifically be targeted and benefit marginalized, underserved populations? You know, how can it be positioned for them to adopt, as Dr. Clark has mentioned, you know, look at the understanding the different personas within the segments. How do you drive that adoption?
Okay. I think for me it can be positioned. First, I would look at 3 or 4 core themes. The first thing, these 4 things will look at both the end user and then the supply and the demand side. So if you start with a supply side, it's basically understanding the needs of the communities. And like Doctor has already mentioned, we have some good products. If the way William has mentioned about the informal sector, there are very good products out there. But now, why is the uptake low? So that takes us back now to the demand side, the end user. For me, the first thing would be digital literacy, for people to understand how, because some people even fear. I know people whom we've trained and they thought if you're using digital financial services or digital microfinance, you will lose your money out there. They think about the safety and security of their money. The moment you mention digital microfinance, they think about the safety and security of their money. So I think it starts with sensitizing these communities for them to understand digital microfinance. And with that sensitization, it has to be coupled with financial literacy. Anyone in microfinance, financial inclusion, if you talk of enablers, financial literacy is one of them. When people are informed, when they understand, because currently, Doctor and myself, Aiden, we are part of the financial literacy trainers for Bank of Uganda. Bank of Uganda has a very good curriculum, financial literacy curriculum, which has been adopted by many, many stakeholders, World Food Program, different UNHCR, different institutions. So if you look at that curriculum or any financial literacy curriculum, it talks about the different financial services, savings, access to credit, financial service providers. But most important is investment, and then digital financial services. This was incorporated in our curriculum for financial literacy, and it's a very good module for people to understand. I think that the gap out there is basically an informational gap. People are used to handling cash, and they are okay with the risks associated with handling cash than the risks associated with digital microfinance. So for me, basically, that would be my submission on that. Over. Thank you.
Awesome. Thank you so much. And I like the fact that you mentioned one thing, trust. I think trust is so critical in this conversation and this whole agenda to drive financial inclusion. And I'll speak from an experience in Nigeria recently. I don't know if you're all aware of, the Central Bank of Nigeria's decision to redesign the Naira currency. And what that essentially did was throw up a lot of challenges within the financial inclusion or the financial services ecosystem, more so for the people in underserved communities. And what we started to find was the trust that had been built over time starting to wane, just because people couldn't rely on some of these services, because again, the demand for those services skyrocketed in a few days, and the service providers couldn't keep up. And so that meant that there were lots of service gaps. And so the question is, how do you tell the woman in the rural community, the trader, to that, the reason you couldn't get your money was because there was a technology glitch? They don't understand that language. So again, you have to. So again, we're on a journey in Nigeria where we need to build back that trust, because even I, as a banked person, had some challenges, and I know that my trust dwindled a little. So how much more someone in the rural community? So I totally agree with you. And I want to come to you, William, around the issue of trust. In your experience, how would you say that is the best way to build trust? And is it a continuous thing? It's not something that you do once. How do we build and sustain trust within these communities or these groups of people?
Thank you so much once again. As mentioned earlier, this is the most critical part for the financial inclusion to succeed, because to most of these remote areas and even some in towns, this is a new thing, and it's all around whether they can move away from what they are used to now doing transactions on these platforms. So financial literacy, as mentioned earlier, will be key in driving out some of these fears. Then also we need to look at the infrastructure development in most of these areas, because we do have the challenge that most of the areas do not have the gadgets that are able to promote the new technologies. And you find that in most cases, they are more inclined to use feature phones that do not normally give enough information around what could be. So if we can do more on infrastructure development, do more on financial literacy, and also for the providers of these services, do more on product designing that are conforming to the communities that they are servicing, we should start getting trust around the communities, and also working in partnership with these communities, because it starts from there. First, you need to get trust. That trust should come from knowing you as a provider, and then they start understanding what is it that you are doing, what is their benefit as a community. Then we'll start seeing these communities getting inclined to these digital platforms and also financial inclusion programs. That gap is still wide in most cases, and as mentioned, most people still have trust issues around this. And mostly you find that these come from undelivered services, like you mentioned, which hinges on how the infrastructure is developed around the area where this person or the community is. So those are the areas that we really need to look at as we march around this. And we all know that this is the new age in terms of how we exist as a community, and just how we try and ensure that everyone is inclusive in terms of the financial needs and the financial services that each community and at each level they require. My submission.
May I have a comment?
Yes, please.
Yeah, just quickly. I remember I use a lot of analogies. I remember my mother telling me that in a marriage, if you want for it to last long, you have to keep the fire burning. And I said that, but if the fire keeps burning, won't the people involved also get burned? Why not the rain to keep raining? At least it can cool down any tempers or the rest. But what I got from that is that building trust is a process. It's not a one-day activity. It's not a one-day drive or campaign. Go into a community and you think that you're going to build trust just anyhow. That's why it is an ongoing process. It's an ongoing process, and it has to be continuous. I remember in 2000, between 2000 and 2002, I used to ride a motorcycle, and this motorcycle, I used to go to different groups in the communities miles away. So I go to the last group, which is seated, and we were into the whole microfinancing, but we are so analog to the point that the distance were very far. So this motorbike, I used to have a backpack and the envelopes. So I collect the money from the communities, and it is in the backpack. So 5 groups. By the time I reach the bank, I don't have bodyguards. I don't have a gun. No one is escorting me. It's just in the mercy of God that anything could happen along the way. But also, as a person, I'm prone to temptation that with all this money, what would I do if I decided to ride this motorcycle away? So that has to come because we build trust at a personal level, but it was so dangerous to the point that when you change a loans officer, then people start becoming a little bit. You realize that the payments go down. You see, so until they build a relationship. Same with digital. That it is a continuous process. But also avoid over promising. I would rather under promise and over deliver than talk about technology and all the good things it can do, and then all of a sudden, one hitch of connectivity, it will kill all the good things that the technology we brought has done. Or if figures fail to add up on the system of the accountant or the manager of the institution. I remember the issue raised, and I hope people really got it, that the timing of the currency change in Nigeria happened at a time when even the presidential and parliamentarian and there was a campaign happening, elections were coming in, then there is a change of currency, then there is this whole mix up. Now you realize that okay, when you need to think of the timing. At what point do you bring in a monetary policy which is going to affect the whole population? Because it's going to affect even institutions. Matching up presidential elections and the senators, governors, and rest with a change of currency made a lot of institutions go into panic, and there was no money at a certain time. You have the old currency, but there are long queues. You have a deadline in which to have that money changed. So you find that the timing is also really very, very important. And finally, let me say this. Human centricity and client centricity is very key when developing products for our clients, because human centricity brings in the aspect of co-creation. There are institutions which don't even have a research and development department. They just go conduct some research and then gain some data and then come up with products. R&D is very, very pertinent. So human centricity, go live within that community for even a week and study their patterns, their ways of living, understand the whole, what they call it, the whole linkages and interlinks within that community, and then now come up with the customer focused products. Thank you so much. My submission.
Wow. Thank you very much for that very insightful submission, Dr. Clark. And I think one of the things a couple of things I took out of your answer is, first of all, trust. I like the analogy to start with, and knowing that it's important to know the audience, understand the needs of the groups that you're targeting. More importantly, knowing that it's not a one-off transaction. So you don't go into a community and leave a product and then go and not come back. Again, it has to be a continuous process. But then that also brings up a question, and I don't know who would like to take this. From a supply side perspective, how do you drive that continuity? And I'll give you an example of why I asked, and I think somebody had made reference to it, and I think it was you, Dr. Clark. An account officer goes into a community, opens a bank account for this elderly woman who could barely speak English. It's her son who's educated that is facilitating that conversation. Anyway, so she has a bank account. They promise her heaven and earth and what you can do with this account. Then 3 months down the line, she's unable to get her money, doesn't come into her account, so she can't do something on her account, and she's trying to reach this person who is no longer her account officer, is unreachable. And then she's panicking because the banks are far from her. It's her son who is able to speak the language that the bankers speak that was there. And then she's totally confused. How do you get the suppliers, the financial service providers, to drive this continuity without, and I hear you said keep it simple, but even in keeping it simple, how realistic is it? And where does technology play a role? I don't know if I've said a lot in this question, but
yeah, I think let me just give a brief about this, and I'm going to give a real life example. And the real life example is that we are working with SCF. SCF is the actual controller firm, Action Against Hunger. And they are working in a consortium in one of the most populated, densely populated refugee settlements. And refugees in Uganda are not confined to a camp. I mean, they're in settlements and they collaborate with the people. So it's like host communities and refugees, but they are really very far. And because there was a grant, the grant was coming to an end. And what we recommended was that we need to think of the supply side. So we went to financial institutions and sensitized them about the importance of designing products which target the demand side, but to also being there when needed, whether it's a toll-free number, it doesn't harm, or whether it is a simple SMS message that should go out such that customers are kept engaged, but also financial institutions have to understand the segments they are dealing with. In this continuity process, we realize that financial institutions are so lost, not all but some, in how to deal with segments in those places. So you realize it's a delink. So when Flavia and my colleague talk about the whole literacy, it is on both sides. You need to create literacy for the supply side, the financial institutions and MFIs, and then also literacy, both financial literacy and digital literacy on both sides. There are some technologies which will not apply in certain areas, and you need to have technology which will really work in that specific place. With SCF, when the grant was running out, we planned a whole 1 year of sensitizing financial institutions and then attracting these financial institutions to go into those rural communities and understand. I used to be in there and tell them, people, I go and even live in those huts, in those tents, in those communities. A mosquito will not kill you. Just carry a mosquito net. Those people don't bite. You just have to be kind to them and just be honest with them. So basically, the good news is that SEF realized its goals because they collaborated with an institution called DALI, and DALI knew these dynamics in out. And we brought on financial institutions on top of, because we created village saving and lending associations. These grew into savings and credit cooperatives. Credit cooperatives could not handle some of the volumes. They are Sudanese refugees, Congolese refugees. Remittances are sent, huge monies, and these institutions can't handle them. So they have to be sent because the termination point is a regulated financial institution, a bank. So we connected the banks and showed them all these advantages. Now there are about 3 banks. Let me not use the word minting money, but serving the community while making money. And they are investing. So that is the continuity which has gone on. Thank you.
Awesome. I see Flavia raising her hand. Flavia, please go ahead.
Thank you, Chinaza. Thank you, Doctor. My submission on your question, you said what can be done. You asked what could be done on the supply side. I think the first thing for from the supply side is to deliver as promised. If you meet any technical glitches, be able to tell the truth that you might experience some downtime times because of the networks and everything. Otherwise, that really frustrates customers so much. The second issue would be to apply the push and pull factors. Let me use the example of agent banking in Uganda, or even use of ATMs. It was hard for people to understand that you can deposit or withdraw money from the ATMs. What financial institutions did was to push people to use the ATMs. How? They put a limit in Uganda of 2 million. If you're going to withdraw 2 million from the counter, they would charge you like maybe 10% of that money. Yet someone who uses the ATM, they would be charged like 2%. So that pushed people to use these ATMs. Then there is the pull factor. The pull factor, let me use the example of agent banking in Uganda. Agent banking, what they did to use that pull factor was to encourage people to access their savings, their open up accounts using agents. So that was a pull factor where these agents, even banks, would go in there, financial institutions, microfinances, to have those alliances with these agents in the different areas, to associate with the agent, so that people feel if it's Centenary Bank or Finance Trust Bank, oh, once the agent is here, we see the bank here. So that was a pull factor. Lastly, the other thing would be looking at sustainability. If you go in there into the community, I think everyone has mentioned this a lot, that bit of ownership from the supplier side, your team, are they able to communicate with confidence? Are they using the service anyway? Sometimes we are talking about these things. I've worked in the bank. We introduced digital microfinance, digital financial services. People were not using them. So how do you expect them to sell them out there if they don't have the confidence to use them? Over. Thank you.
Thank you so much. William, do you have any comments on the back of Dr. Clark and Flavia's responses? William, we can't hear you.
Just to add on what Flavia's submission was in terms of how we make sure that the supply side also takes responsibility, because the issue to do with after product delivery is normally where this question is, where after the first service is given to the customer, there is no follow-up to ensure that there is that satisfaction from what you have delivered and the customer can follow through. And from the supply side, mostly we can enhance this in terms of putting up the call centers or the messaging processes like the doctor had mentioned. That ensures that we are at any stage informing the customer if something happened, what else could they go on to try and navigate the issues they are facing. We have situations where sometimes these call centers, you can call for 1 hour, no one is picking up. So it also requires an investment in this area to see whether some of these can be recorded services where the customer calls and it doesn't require somebody to pick up, but the service can still be delivered through a recorded process that can be given to the customer who is complaining. It's also a requirement that at least you put up these procedures that customers can follow in the areas of their existence. Flavia mentioned the issue to do with agents. Some of these services that customers have the head office the technology, and it's a that the customers understand that these services can actually be accessed from the agents' points that are given in their communities and they are available there. So that will be my addition to what Flavia had submitted.
Thank you so much for that great addition, William. And as we draw close to the end of this very interactive session and very interesting and insightful, I dare say, what I'd like to do is just sort of have a forward-looking view from each person, and just to ask each person, if you were to look ahead, what would you say the future trends and innovations that we can expect in this area, in the field of digital microfinance, and what the impacts could be on financial inclusion? So I think I'll start with you, Flavia.
Thank you so much. First, to answer your question, the future is bright because this is the way to go. Yes, the future is very, very bright. but it has to be a couple of things from both the demand and supply side. There has to be a lot of innovation, and what William mentioned last is basically a way in the financial sector, they call it uh, getting to hear people's views from the customers, for you to redesign or make a few adjustments on the products. In the NGO world, we call it the perception survey, or perception survey per se, maybe hearing from the customers. So client satisfaction is very crucial for both the supplier and then the demand side. So basically that's it from my side. Whatever innovation, we should look at client satisfaction through feedback to make the products better and reach out to the marginalized communities. But segmentation in terms of outreach is very, very key, because you can have one product, but it can reach out to different market segments. But how you reach out to them will ensure inclusion of those different market segments. The way you reach out to people in the settlements is different from how you reach out to maybe communities in the urban settlements or slums. The way you reach out to people with disabilities, maybe you go through their associations, if you're looking at youth. So basically, that's it from my side. Over. Thank you.
Awesome. And I think to sum what you've just set up is to design processes, solutions, products with the end user in mind, so that it's actually fit for purpose. Absolutely correct. I totally agree with you. I'll come over to you, Dr. Clark. Future trends, what can we expect?
Yeah, the expectation is that the future is really pretty bright, because there's a strong economic activity where these segments targeted by the micro finance entities are located, or the clients they are serving. So you see that growth is happening in the different communities, economic activity, value chains are developed, ecosystems are being built. So you find that even digitalizing these communities becomes one, cheaper, because there is the whole open APIs, there is co-opetition instead of competition of financial institutions. That's the whole agency banking. But also you realize that on top of economic activity, there is an affirmative economic action towards the populations or the segments which are not only underserved but marginalized amongst the underserved. For example, women are coming out as successful business persons. Youth are coming up with real ideas and businesses. Persons with disabilities. So you realize that inclusive finance, driven by microfinance institutions, is the future is really bright. Regulation is one issue that we didn't tackle much during this session, but regulating these institutions is very key and very important, because the client trust now grows. They know where to run to in case of loss of money, but also the thresholds within microbanking or microfinance have to be reviewed by the ministries of finance, the central bank, or the regulatory authorities, so as to avoid being any country being in a situation like Nigeria was in, because it was a question of lack of liquidity for these institutions. Right now, the elections going on almost everywhere, and upcoming elections across the continent of Africa. Botswana right now is at the peak of it. DRC is coming in soon. A number of those. So as we look at regulation as a safeguard and building more trust, We need also to look at the thresholds, as Flavia was highlighting, and also to ensure that these MFIs have liquidity enough to be able to serve the client as of when they need. And technology should be customized to the particular institution and the segment. It doesn't matter which platform you're using, but if that is done right, then the future is really very bright. We're already seeing massive results. Thank you so much.
Thank you so much, Dr. Clark. And two things I'll take out of your summation would be collaboration, very important, and funding. We need funding to achieve these very ambitious goals and keep sustainability. So over to you, William, your thoughts on the future trends and that we can expect.
Yeah, thank you so much once more. In concluding, I think we have all realized that this is digital microfinances are here to help us have more inclusive economies and equitable societies. My view is that the future is bright. I think it requires further collaborations with both the regulators. It's exciting that most of the African, or should I say, developing governments have realized the need to actually have this financial inclusion at the key as a key in terms of sector development, and we've seen that there's a serious drive to try and have this as a key program in trying to alleviate poverty and sustain growth in most of our economies. So this gives a good impression that we are going somewhere. What is important is how do we, as players of these societies, ensure that first we sustain, and as the doctor is saying, we ensure that we develop products and develop platforms that ensures that we cover those underprivileged people in the societies, and ensure that we do not, in the process, create a monster in terms of risks that again come with digital microfinancial services. So the collaboration among providers, I think this will be a good platform, even where policies are developed, if we can be meeting like this to look at those across the globe policies that are developed in this sector, to try and see how best they can be adapted in the communities to try and enhance financial inclusion. There is no alternative around it. In this segment, we did have a question around exclusion and all that. I think you would see from there that there's no alternative. If we exclude these marginalized or under serviced societies, we end in a situation where we've been for a long time. So it's just important that as we move forward, we carry everyone along and we ensure that the regulation, the systems, the infrastructure that are developed do take into consideration that this is the way to go. My submission.
Thank you so much. And you've all been fantastic, sharing deep, interesting insights from your perspectives, experiences, and your wealth of knowledge. And if I were to sum up this session and just sort of bringing everything together to talk about what this really means, I think that the main currency for driving on harnessing the impact of digital microfinance on financial inclusion is trust. And if you start to look at that, what are the key if you start to unpack that, what are the things that contribute or drive that trust? I think you start to talk about transparency, as Flavia had mentioned, collaboration, as Dr. Clark has also implied, simplicity, empathy, just, wearing the shoes of the people that you're trying to solve their problems and understanding their core needs so that you design to suit those needs. Sustainability and continuity to maintain that trust. Education, so talking about digital and financial literacy, and more importantly, funding. All of these things cannot be driven without the necessary investments and funding to do them. So thank you so much for a very, very insightful conversation. I appreciate it, and I thank the platform owners for giving us the opportunity to have this discourse. We can never exhaust these conversations. It always is ongoing. And I think that we've been able to at least generate some insights and given some people something to think about and how to solve some of these pressing problems that we have on the continent. Thank you so much. Over to
Thank
you.
you so
much.
Thank you so much, everybody. Let me take you on one point quickly, everyone. Maybe everybody, even the moderator, will have something to say about it. Is this issue of security? I can tell you, even those of us that we consider ourselves literate, educated, as we can see it, we still get defrauded somehow. How do we protect people who are in the rural areas or who are the so-called illiterates when we look at the security of their funds? So let's take it one after the other. I don't know who's going to jump in first.
I'll come in
Because I have a
first.
hard stop, maybe I should go first so that I can join
Oh,
my
okay.
others. Okay, so in terms of, so the question is, how do you overcome the challenge of security and I guess trust in using those services, correct?
You're very right.
I think there's a regulatory role. And so first of all, for instance, the Data Protection Act that was recently approved by the federal government in Nigeria is a key step in the right direction. But beyond having those sort of policies, is how do you then get it to those people that need it to understand it and know what their rights are and what's available in terms of protection, right? So there's the role the regulators play. There's also the role that even, I guess, key stakeholders within those communities have to play. So the village heads and then service providers, because then who takes this information to these people? Typically, what we find is a lot of these announcements and decisions are made that actually exist to protect the interests of the people in these communities. But then the challenge is in the communication and getting it across to them to understand what exists to protect them. So it's one rule for the regulators to have the policies in place and then ensuring that there's a sensitization that is done, that it gets to these people so they're aware of what their rights are. I hope that answers your question somewhat.
Okay. Any other person that wants to try?
Yeah, I would say that it is the responsibility of both the supply side and demand side to ensure security is enhanced. Reason being that we as the supply side, for example, must train the clients to be vigilant and highlight indicators of possible fraudulent acts because like you rightly said, even we have been defrauded through playing with our psychology. What about the person in the rural? So we need to be vigilant as long as we can know the indicators of a fraudulent pattern. But also for service providers to have real-time instant blockage of a transaction or a reversal should a fraud be reported. Some of these fraud issues, which again comes to security, is an inside orchestration. Whom do they recruit? Who is charged with the technology inside the institutions? And how do they ensure that during onboarding of human resources, they also have a psychologist on the panel who will understand how to tell a person who is liable to a fraudulent act, because some of these fraud we have found out are internal inside the institutions. That's where it begins. and then it's abused through the technology. But also the community has to be vigilant. So it is on both sides. Vigilance of the community supported by with the providers of services by taking them through indicators of a possible fraud. Like for example, don't share your PIN number. That's quite easy. Many share their PIN numbers. You realize that people own SIM cards. They don't own a phone. So they own SIM cards and they're like 5 people using the same phone to transact. They just switch SIM cards. So the pins are known by the 5 people. So they need to be vigilant, but also very strict laws. Anybody involved in a fraudulent act should be brought to law. And if found guilty in such a practice, should be apprehended and should be an example to the rest not to engage into digital fraud. Thank you so much.
Thank you so much, Dr. Clark. Flavia and William, do you have anything to say on this?
Yeah, I would want to just add to what Dr. Clark has said in terms of, I see it from the supply side that while it's both sides, but I think the supply side has more to do in terms of securing the platforms that are available to the customers to ensure that they are actually able to provide some sort of multi-factor authentication processes, and I think because we have to balance that the digital platforms do not again become bureaucratic in terms of the services we are providing, but I think embedding a multi-factor authentication process would help. In this process, we are speaking to what do you have. In this case, we are looking at the identification cards that the customer is able to provide. We are looking at who you are in terms of being able to use things like fingerprints, some codes to identify who the actual customer is, and we're also looking at other things like what can you see, as the doctor said. He talked about pins. These multi-factor authentications can provide security in terms of, and also provide confidence to the customers that really, if they are on that platform, they are secure, that first, the platform is able to assure them that they are the only ones seeing their data in that sense, and that whatever it is that is connected to the account is only the information that they have provided. And I think this would obviously require a little bit more investment from the supply side to ensure that the cyber security issues are taken care of. It cannot be completely be eliminated, but we have to be at a point where we provide comfort to the users that our processes and our platforms are secure to use and they can deliver the service that has been promised to the customer. My submission.
You're muted. Should I go ahead? Okay, thank you very much.
Yeah, Flavia, yes, sorry.
Yes, I do. Thank you. I think from my side, growing up, my mother used to tell me that I should be able to protect myself. Security starts with you. If we are talking about the supplier side, the institutions, their security side should start with them. And likewise, from the demand side, the individuals. From the supplier side, I think we all know, since we've shifted from the cash-based economy to the digital one, you've realized that there are so many cyber attacks in terms of digital microfinance where many banks are hit, especially in Uganda. It has happened a lot. Some of them don't even want to bring them out in the limelight. So they are hit very hard in that area. From the supplier side, they should have systems in place to protect themselves, but one of them, usually the fallback, is insurance, because sometimes it's inevitable since the people who are involved in such attacks are part of the system. From the demand side, from the end user side, security starts with us. If you should be able to protect your money right from what are you mandated to do Are you sharing your phone with another person who can get your number? Some people write their pins somewhere and they write, this is my pin number for mobile banking, this is for this. So for me, I feel it starts with you, but most important for us to build trust, there has to be the pull and push factors on both ends. What is in it for this person, and how can we best sensitize the two stakeholders to make sure that they are able, because it calls for both parties. If you realize that from the demand side, many people are losing their money, people will lose trust in the system. So it calls for a lot from both parties. I know an institution in Uganda where they were hit 3 times in a year and they were forced to close their mobile banking platform because it was not sustainable for them anymore. So it is two sides of the coin. How do you maintain in such a way that you're both protected? It calls for a kind of a support system on both sides, but I would maintain the issue of satisfaction surveys, or which we call perception survey from our end in the NGO world, but satisfaction surveys in the profit sector. How do you ensure that you improve the systems? We've had cases where people were hit with mobile money fraud, and even the service provider didn't know. So how soon do you reach out to your customers to prepare them to up their security, to up their game to protect their money? Over, thank you.
Thank you very much. I'm sorry for keeping you back in the studio, but you've actually done well to the question of the day. And thank you for coming on this platform once again, Africa Microfinance Conference 2023. It's a pleasure having you, William. It's a pleasure having you, Flavia, and Dr. Clark. It's always a pleasure having you. You enjoy the rest of your day.
Thank you so much.
Thank you. Have a lovely day. Bye-bye.
Thank you. So we have come to the end of the first session this morning. We'll be taking a short break before we'll come back with the next panel session. Thank you for joining us. We'll hope we'll see you very soon. Thank you.